I don't necessarily think it's going to be that extreme. I did joke in my most recent piece about the fact that, we've come into the year with the Fed fund futures expecting two cuts in rate cuts in 2025. Pretty much the history is that the futures aren't very good predictors. So perhaps guessing anything but two cuts is probably the right guess. I think the market can do fine in terms of, probably wouldn't like hikes necessarily, but in terms of a pause, as long as it's pausing because you're continuing to see the economy performing better than expected, because that likely means earnings better than expected. So I'm not too worried yet on the Fed. Obviously, if you get some sort of we've had a little bit of a bump up in inflation pace. If that would, move up more and that would cause some sort of hiking again, that wouldn't probably go over very well. So I think that's a danger. I don't put a high probability on it right now, because I think the one thing the Fed knows it has in its back pocket is that housing inflation is likely to continue to recede, and it's a very large portion of our CPI index here.
All right, so Bill, maybe the Fed may not be forced to U-turn and actually start hiking rates, but let's use a reasonable working assumption, and that is the potential inflationary effects of the new Trump administration could make the Fed do nothing at all. That is, sit on its hands. If the market cannot count on any more cuts, any more help from the Fed, then what I'm trying to figure out is the tax cuts. Let's say corporate tax goes from 21 to 15, the deregulation, et cetera. Is that going to be enough to keep earnings at 15%?
I say it certainly could, right? And maybe they were kind of talking a lot about why the market is a little jittery, right? Uncertainty is there because you go into it saying, will the deregulation, will the tax cuts be enough to offset the drag from, having some, I think they're going to be targeted trade wars, let's just call it that, in terms of the tariffs. He's going to use those as a weapon against specific countries, and that may in fact cause, I would expect it to be some sort of a headwind. But again, it's where does that all play out is, I'd argue impossible to know. I think that is maybe the danger in the market, is that the market is, to my view, at least everything I look at, is setting very low odds of recession next year. And it's not that I have any sort of a forecast for recession. I'm just saying it's priced for a very low probability. That would make for some fairly ugly markets, I think, if suddenly we got those probabilities moving up. I don't necessarily foresee that. It's just you have to be, mindful of where the bets have been made in the market.